today's topic is about flexible budget. Yeah. Maybe you have something in your mind why it becomes flexible budget. Yeah. But it's okay. I know that this is the last topic before mid-test, but don't worry because you have also already learned about budgeting, right? Yeah, so I think no problem with flexible budgets because you are also studying about budgeting this semester. Okay, so Dr. Hannah, actually, this is only our international class students, so there only will be 17% during these meetings, yeah. Maybe some of them also trying to catch this meeting. Okay, I hope you can understand with the explanations from Dr. Hannah, and please ask some questions for Dr. Hannah. Okay, please ask some questions since this is the last meeting. Yeah, please, uh, please ask some questions to Dr. Hannah. Okay, Dr. Hannah, can we start the meeting or any problem before?
No problem with me.
Okay.
Vita, just to check with you, they have learned about budgeting with Madam Wan Shafiza. Is this the same class?
Yeah,
Huh?
yeah, the same class, right?
But you have
Yeah.
the whole semester for only budgeting.
Yes, one semester for budgeting subject. So it becomes one subject. Budgeting is one subject.
But
Ya.
when I look at the
Kelas, kalian
syllabus,
belajar budgeting sama siapa? Halo, kalian belajar budgeting kan semester ini?
Iya, Ma'am.
Ya. Yang tim teaching juga kan?
Iya, Ma'am.
Yeah, it's also team teaching with
Madam
what
Wan,
is
Ruan.
Madam Wan?
Madam
Yeah,
Wan.
is it right? Yeah. That's right, ma'am. This because the same class then.
The only different, I think, this only will be covered the flexible budget, which is not
Yeah.
included, I think, in your budgeting technique.
Yeah, it's not included. But they actually have overview about what is budget, what is how
Yes.
to make a budget, yeah, something like that.
All right.
Okay. Dr. Hannah, you can start your class, please.
Alright.
And my students, listen on your camera, listen to Dr. Hannah carefully. Yeah, and please give response to any questions. And I hope you can prepare some questions. Okay, thank you, Dr. Hannah. Please, it's time for you.
Thank you. All right, class. Assalamualaikum warahmatullahi wabarakatuh. Okay, so before we proceed with our class today, just to highlight a few things that we have learned in our first class, which is about the cost, volume, profit. Hopefully you still remember where you have learned about the variable, fixed and mixed costs, and you also learn about this income statement, how to prepare the CVP income statement and try to determine the contribution margin. All right, and you have completed the break-even point using a few approaches in your CVP analysis, and you also learn how to determine the sales required in order for you to earn certain target net income, and also about the margin of safety. All right, that is under the topic of CVP. And the other last week we learned about this standard costing. Hopefully you still remember where we describe the standard cost. Okay, we try to determine the direct material, the variances, difference. We call it variance, and variance where you can know the favorable or unfavorable cost. Okay, you also calculate the direct labor and total manufacturing variances, and you prepare variances report as well as the balance scorecard. All right, and today, just a minute. Is it full screen, the slide now?
It's already full screen, ma'am.
Okay, all right. So today we are going to look at the budgetary control. Okay, where I think, let me minimize the screen. All right. Okay, so today we are going to look at this budgetary control and static budget report. All right, and we try to prepare the flexible budget report. To me, I think among these three topics, this is the most simplest one and the shortest one. Okay, so I think no worry about this. You can do few exercises that we have given to you, and it is a very simple. Okay, so let us look at the first learning objective from this topic. All right, we need to describe the budgetary control and the static budget report. So what we have here is where the budgetary control is actually a management technique. Again, it is about the management, and we learn about the management accounting. So of course, we prepare something for our management, and maybe you are part of the management as well. All right. So, but actually, the budgetary control is a management technique that helps the organization to regulate and monitor the operations through the use of budget. All right. And the process actually involve comparing the actual results and against the planned objective using budget report. All right. And this report provide management with the feedback on the performance of operation and will enable them to make an informed decision. In terms of frequency, the frequency of preparing budget report can be varied, right? It depending on the need of the organization. Maybe some organization wants it monthly or maybe weekly. It is up to the management, and you prepare when it is request by the management. And the analysis of differences between actual and planned results is actually a very important aspect in budgetary control. So let's see by if you have identified the difference, you will look at the causes of the differences. Like standard and CVP, also you will study why it is different from the actual and budgeting. All right, and you as a management can take corrective action, and maybe you can improve the efficiency and effectiveness of the operation. All right, and actually, management use this budgetary control as an important tools to seek the techniques or try to maximize or optimize, we call it, the use of resources when you want to try to achieve the strategic goals of the organization. One of the strategic goals, of course, you want to maximize the shareholders' wealth. Okay, so we normally when we do, we will look for the benefit of the shareholders well, because indirectly we as employees and employee of the organization will enjoy certain benefit after we achieve a good results of the operations. All right, That's little bit on this budgetary control just now. And in budgetary control, actually, if we look at the image, we have few activities, all right, where all this activity is actually aimed to achieve the financial stability. And actually, we want to success in an organization. All right. Why we need to success? Of course, because we want to remain in the industry. All right. We want to continue our business. All right. So we don't want to close down after 1 year in the industry. We want to build up a good names in the industry. So that's why we need to look at these activities where involve the first step here. If we look at develop the budget, where the first step actually to develop a budget that normally will outline these what we call financial goals and objective. Of course, you need that because that is considered can be used as a direction for the employees. All right, so you need to outline the financial goals and objective, and these actually involve various factors where when you want to set or you want to develop a budget, hopefully you still remember at the a few last two classes, I'll always mention that when you want to set a budget or you want to have a figure, you have to refer to the previous or based on the historical data. All right. Also, you will look at the market trend before, and you will look at these economy indicators. All right. So all the data is mostly all the previous data. All right, in order for you to use as your benchmark when you want to set up a budget. All right, and the next step is actually for you to analyze the differences between the actual financial performance and the budgeted figures. Eh? All right, and this actually helps you to identify the areas for improvement. And again, when you analyze, you can actually identify if any potential risk exists, all right, in your operation. All right, so that could hinder you or the organization from achieving the financial objective. All right, so once you have this finding, all right, you try to modify, all right, modify your future plan and budget to align with these new financial goals and objectives. All right. And at the end of the activities, if you think that it is not good or not suitable, then you will take the corrective action to address any discrepancies. All right. And to ensure that the organization stay on track towards achieving the financial target. So that's why you can modify in order for you to make sure that you are aligned with the objective or financial goals of the organization. All right. So this is actually how you make sure or how you control the organization to stay relevant in the industry. All right. Because if you have a mistake, then at this time you still can correct your organization. Right. That is why we need these few activities in our budgetary control. All right. So when a formalized actually reporting system, it is important. All right. For company to effectively manage their finances. All right. So what need to be looked at is actually you have four items here or four key component we can see that can be used in order for you to manage your finance. All right, so the first thing that you need to do is to identify the name of the budget report. All right, state the frequency of the report and the purpose of the report and the primary recipient of the report. All right, so by specifying this aspect, or the reporting system become more structured and organized. All right, so you have all these items. All right, it can be better for you to communicate with the other department or any other top management in the process of making the decision. All right, so uh, we look at another example here. All right, this is partially budgetary control system for manufacturing company. It is only example. It's only an example to you. So where partial budgetary control system actually a financial management approach that can be implemented, okay, to track the companies and try to control the expenses, where actually it involve forecasting expenses, okay, identifying potential cost saving, analyze impact of changes in expenses on the overall budget. So let's say you monitor and control the expenses, then the manufacturing companies or your companies can make more informed financial decision and improve the bottom line lah. All right, and this can also be used to identify the area where I think the cost cutting measures can be implemented. Okay, you have a few techniques that you want to reduce your cost. They will look at this figure. Maybe you will look at your labor and so on. All right, so how you present, this is the example, the name of report. We can look at the sales here and the frequency of preparing the sales report. This is normally practiced outside there. All right, so normally they will prepare every week. All right, the person in charge will prepare every week of the sales report. All right, where the purpose of this report is actually to determine whether the sales goals are met or not. All right, and the person that received this report is the top management and the sales manager. All right, and then if labor also most probably will be prepared weekly to control direct and indirect labor costs, and this is actually useful for the production managers. Okay, and scrap report. Okay, we want to look how many errors that happen in the production. So normally this is a daily report. Determine the efficient use of material for the production managers. Departmental, maybe we prepare departmental selling and income statement monthly, all right, to control the overhead, selling and income goals, all right, for the particular department manager, for sales manager, and for top management. We prepare the income statement. The top management normally won't go through all the sales labor and so on. That is actually for the head of department to focus on their responsibility, how to control the costs. All right, the top management normally will focus on the revenue or the income of the company, and they will start to question you why you having losses, or if you are getting increase in profit and so on, then the top management will feel happy. If not, then they will start to screw you. All right, that is actually happen outside there. All right, so that's just little bit example of the sales report just now. And here we can see that the budgetary control involve all but one of the following. So which one is it is actually using static budget, okay? Using static budget. All right, so we look at the static budget report. What is actually static budget? Uh, did you learn this in your budgeting class? Static budget? I don't think so. Tisa, you learn this with Madam Wan Shafiza? Is it included in your syllabus? under the budgeting class? Anyone? Have you learned about this static budget?
I think we haven't learned that, ma'am.
That is not in your budgeting, right?
Yes,
All
ma'am.
right. So have you completed the class with Madam Wan, Anna?
Yes, ma'am. It's already three meetings, three
The
times
meeting.
meeting.
All right. Okay. Thank you for responding. All right. So we look at the static budget report here. A static budget is actually a projection of budget data at one level of activity. All right, static at one level of activity. If you take 10,000 of production, then we will consider at 10,000 of budget. All right, so a static budget is actually a financial plan that developed for a specific level of business activity. It is an important tool for budgetary control. It helps organization actually to compare with the actual performance against budgeted figure. All right. So in a static budget, the data included is based on actually single activity level. All right, and it does not consider variation in activity level that may occur over the course of physical year. All right, so they only based on single activity level. So it is important for you to remember that all budget included in the master budget are considered static. All right, which means that the budget remain fixed regardless of changes in the business activities level. All right, so when comparing this actual result to budgeted figure, the static budget only consider the activity level used in the master budget. All right, so which can result in inaccurate comparison if the actual business activity level varies. Okay, so of course, normally the level of activity will be varies. So actually, it is not comparable. Okay, if you want to make a comparison between the actual with static budget report, it is a bit difficult. Okay, and not relevant. We can say it is not relevant. So let us look at the example here. Budget and actual sales data, okay, for the first quarter and second quarter. All right, so the sales budget here is 180,000 for first quarter and 210,000 for second quarter. All right. And the actual first quarter is 179,000. Second quarter is 199,500. All right. So we can see at the first quarter here, 180 compared to actual. So we have a difference of 1,000. And the second quarter, the budgeted is 210, but the actual is only 199,500. So we have a difference of 10,500. So in total, the difference would be 11,500. So we look at the report, how you prepare the report. Very simple. Here we can see this is the how the report look like. Okay. Um, this is the question just now, okay, and this is the report. You can't see my cursor, is it? My pointer. Let me. Right, this is the. You can see. Never mind, you still can't see my pointer. Can you see the pointer? Yes, okay. All right. So this is the question just now, and this is how the sales budget report look like. the product line, for example, you only have one product in the production, right is your product, and the budgeted figure is 180,000. The actual is only 179. So it is lesser than the budget, means you think this is a favorable. All right, so favorable, you, okay, unfavorable, favorable or unfavorable. Okay, budget is 180, but actual is only 179. All right, so it is actually favorable. We look at another example. All right, so the second quarter is 210 and actual is 199,500. Oh, okay. This is for the sales, okay? So that's why it is unfavorable, okay? We expect to sell 210, but we only sell 199. So that's why the sales here become unfavorable, all right? So, but if when come to the cost, if it is lesser, then it should be favorable. Okay, it is contra with the sale because you expect you can sell more. Okay, we want to sell more. So the figure should be higher than the budgeted figure. Then only we consider it as a favorable. But if it is lesser, then it's going to be unfavorable. All right, and this is the year to date, okay, where you include the total figure in your presentation of the sales budget report. Okay, this is the budget, this is the actual, this is the second quarter, and this is year to date, where year to date is the total figure. All right. So now we look at the users and limitation of the static budget report. Okay, static budget report is actually appropriate when assessing managers' effectiveness. Okay, specifically, this method actually most appropriate when the actual level of activity closely approximate to the master budget. All right, if it is similar, then it is good for you to use this static budget report. All right, because the behavior of course is fixed in response to changes in the activity. So it is important for you to take this into consideration. This method is actually more suited for you to look at the fixed cost. Okay, because fixed cost is actually static in whatever level of activities, right? So that's why it's more suitable if you want to compare the fixed cost. So by using this method, actually managers can gain valuable insight into the ability to control costs and make informed decision about the optimizing this their operation. All right. So normally we use static budget to evaluate our managers. Okay. So static budget is useful in controlling costs when behavior is fixed. Okay, as I mentioned just now, it is more suitable if you want to control the fixed costs. All right. Now, we try to look at the example here. All right. Lawler Company expect to produce 5,000 units of product CV93 during the current month. A budgeted variable manufacturing cost per unit. Okay, this is the cost per unit CPU. For direct material is $6, direct labor $15, and overhead is $24. All right, and monthly budgeted fixed manufacturing overhead costs. Monthly, all right, monthly budgeted fixed manufacturing overhead costs 10,000 and 15,000 for depreciation and supervision. In the current month, Lola actually produced 5,500 units and incurred the following costs. The total cost incurred actually direct material is 33,900, direct labor 74,200, variable overhead is 120,500, depreciation 10,000, and supervision is 5,000. So prepare static budget report. All right, so let us look at static budget report here. So budget at 5,000 and 5,500. All right. Direct material, if you look at the previous slide, is 30,000. How you calculate? Based on the production of 5,000. Okay. So now 5,000 times 6 ringgit is 30,000. And then 5,000 times 15 is 75,000. And for overhead, 5,000 times 24. However, for actual figures, all right, for actual figures here, okay, 33, 74, 120,000, it is based on the information given in the question. If you look here, 33. This is the actual cost incurred. All right, 33, 74, 120. Okay, and fixed cost the same at any level of activity. However, the variable cost, the actual variable cost at 5,500 would be different, 33, 74, and 120. Okay, so that's why if we look here, we only copy the 33, 74, and 120. We don't have to do any calculation yet. Okay, so that is considered static budget report. Which is actually, is it comparable? It is not comparable because you base on 5,500 at the actual level compared to 500 at budgeted figures. Okay, it is actually not comparable. And you, when you calculate, you will have 3,006 of unfavorable. Okay, keep in your mind where we are going to test under the different way of calculating it, the right way of doing it. All right. So this is the point where flexible budget exists. All right. Flexible budget project budget data for various level of activity. Okay. The first one static. All right. We don't have to calculate based on 5,500, we simply take the figures from the question. However, when flexible, we have to do more accurate calculation. All right, I will show you the example later, where actually this involves series of static budget at different activity level, and the process more useful, and it can be prepared for each type of budget in the master budget. Right? So we look now, let's see. All right, button robotic static budget based on the production volume of 10,000 units of robotic control. Let's say we have this question and this is the budgeted production in units. Okay, let's say now we want to produce 10,000 and the budgeted cost is about 1.1 million. All right, you involve in indirect material, indirect labor, utilities, depreciation, property taxes, and supervision. That is, you have 6 variable costs. All right, and this is the budgeted production unit 10,000. Let us look this stated budget report. Okay, so you have budget 10,000 and your actual is 12,000. Okay, so you include the whole amount for the budgeted just now. All right, and the actual figures, let me show you in the question. Okay, If you look at the question, we will use the same figures. Okay. This is the actual figures, 295, 312, 225. We just include it here. All right. And you make comparison. The difference between 10,000 and 12,000. So means if budgeted is 250 and your actual is 295. So your unfavorable figures is 45. It is increased by 45,000. And indirect labor increased by 52,000. Utilities increased by 35,000. All right. And overall, you can see the cost increased by 132,000. But this is not accurate because you compare budget and actual at different level of activities. Okay. So now, actually, you have to prepare flexible budget. Okay, so unfavorable difference is about 12% over budget. If you simply make comparison like that, then you will have 12% over budget. That is actually not relevant if you see here where to compare actual variable cost for 12,000 with budgeted cost for 10,000. It is not comparable. If you want to compare, you also have to compare 10 or compare at 12,000 actual level of production. Okay, if you want to compare, you have to compare with 12 and 12 or 10 and 10. All right, so then it is comparables. Okay, so actually what you need to do, so now we have to do it this way. Actually, the first thing, once you have the figure, you know that you have indirect material, indirect labor, you have the utilities. So the first step that you need to do to identify the cost per unit. All right, this is based on the production of 10,000 unit. All right, so what you need to do, 250,000 divided into 10,000, therefore it is equal to $25 per unit. You need to do the same process for indirect labor. 260,000 divide into 10,000, then you will get $26 for indirect labor and also for utility. All right, so now when you want to compare with 12,000 level of activities or 12,000 of unit of product, then this figure 25, 26, and 19 should times 12,000. Therefore, your total would be 300,000, 312, and 228. Now it's more comparable. Let us look at the next table. All right, the one that we have just calculated, the indirect labor at 300,000 because 12 times 24 and 312 and also 228. All right, so now you can compare between budget and actual at the same level of activity. Okay, you have to remember once you get the question, what you can do, you have to identify the cost per unit first, all right, in order for you to prepare the flexible budget. It is wrong for you, it's not suitable. Okay, there is a technique where you compare between budget and actual. 10 and 12, that is considered static, but that is not actually relevant or it's not supposed to be that way. When you want to compare with the same level of production. So now, after you calculated for each unit of material, labor and utilities, and then you times with 12,000 unit of production, therefore the figure now is more comparable, all right, with the same level of activities. All right, so indirect material, you have favorable of 5,000, which you budget 300,000, only incur 295, so you have, let's say, save 5,000. No save for labor, but you can save utilities 228, but you incur only 225, so different is 3,000. So actually the total favorable cost or the cost saving here is 5,000. And as you know, at what level of activity the fixed cost remain the same, right? Okay, so no saving in your fixed cost. So overall, you have 8,000 favorable, or you save 8,000, right? So hopefully you have a clear understanding about this. A bit confusing where from static you can compare 10 to 12, but in the right way you have to use the flexible budget. So that's why you learn flexible. Flexible means that you have to change the figure at the same level of activity. You determine first the cost per unit and only you compare. It is different with static, where static strictly or directly take the figures and simply compare. Okay, that is the difference between static and flexible budget. All right, so now how we prepare the flexible budget? The first step is actually for you to identify the activity index and the relevant range of activities. And this actually involve determining the unit of measurement that will be used to track the level of activity, such as the number of units produced or number of customers served, right? And once the activity index and relevant range of activity have been determined, so we can proceed to the next step, where is actually here you need to identify the variable cost which is associated with the activity. And the variable costs are the costs that vary. Indirect, which is proportionate with the changes of level activity. Yeah, when we have learned about the variable cost earlier, so it change based on the level of production or activities. All right, so the example of the variable, hopefully you still remember: direct material, direct labor, variable overhead. All right, so after that, you can proceed to the third step in the budgeting process, where you need to identify the fixed costs associated with the activities. Where the fixed costs, you know that actually the fixed costs do not vary, right? They do not vary with the changes in the level of activity. For example, the rent, the tax, and insurance, all right? So for each fixed cost, actually, you can determine through the budgeted amount for a given period. So maybe it changes, it depends in the situation. For example, depreciation, because you purchase a new machine and so on, that is different. All right, so that you have to learn in another part of the fixed cost. Okay, so based on the same level of activity, we make assumption that we are using the same facilities. All right, and once you have identify all that, then you can prepare a budget and prepare for the selected activity increment within the relevant range, where you can prepare at 8,000, you can prepare 9,000, 10,000. It is up to the management. So you can see there at what level of production is the most profitable actually. All right, so when you compare between expected and revenues at each level of activities. So this actually where you can identify the optimum level of activity to achieve your target profit or financial outcome. All right. So you look at the performance or the figures that you obtain from this flexible budget, so you can set your mind at what level we can produce or we can yes, we at what level that we can produce. Okay, so let us look at example here, a case study here. All right, for Ford company management uses flexible budget for monthly comparison of actual and budgeted manufacturing overhead cost of the finishing department. This is only an example for you. Actually, I have ever involved with the production department and to do a costing for the product. It's not that easy, but it is for the purpose of our study. It looks simple, but it is quite interesting to those who love maths, who love costing. I love to do this when I want to identify each cost of the variable cost when we want to set a selling price for a can of drink, for canned drink. Okay, so normally we will start to calculate at what level of production, then we can start to have a profit actually. All right, so this is the way how you get involved with the manufacturing department. Okay, so in this situation, they only focus on the finishing department, and the master budget show the expected annual operating capacity. In this flexible budget or example or illustration here, it based on the direct labor hours of 120,000. All right. So when we want to identify cost per unit, we will divide based on 120,000 direct labor hours. So look at the variable cost here. We have 180, 240, and 60,000. And we have a fixed cost of 180, 120, and 60,000. So let us continue to identify, let's say, activity index, relevant range given to you between 8 to 12. So you can calculate at 8, 9, 10, 11, and 12. Or if you want to calculate 8 and 12 also can. It depends on the question given to you. All right. So now when you want to prepare a flexible budget, as I mentioned earlier, once you get the information about the variable cost like this, you have to compute. Now you have 180,000 cost of material. So to identify cost per unit, you have to divide in with 120,000. So 180 divided into 120,000, you get 150, 1.5. All right, $1.50. All right, for indirect labor, 240 divided into 120, you get $2. Utility 60 divided into 120, you get 50 cents. All right, so 150 plus 2 plus 50 cents, you derive to $4. So the cost per unit is $4. Right? And we look at the information. Another step here, you have 3 fixed costs given in the question. Depreciation 15,000. Where do I get this 15,000? Because if you look at the question here, 180,000 divide into 12 months because we want to calculate a monthly. So divide into 12, supervision you divide into 12, property you divide into 12. All right. So now that's why we have 15, 10, and 5. This is the fixed cost that you involve for each month. Okay. Then the question want you to prepare the budget for selected increment of activity within the relevant range. Prepare in increment of 1,000 direct labor hours. Let us look at how to answer this question. So the relevant range is 8 to 12. Let's say I prepare for each of 1,000 increase because the question requests prepare 1,000 increase for the activity level. So now this is 8,000 activity level. You times 150 times 2 ringgit times 50 cent. All right. So you will have your variable cost, a new variable cost here. And for 9,000, for 10,000, all right, 11 and 12,000, right? So if we look at the fixed cost, it is the same without, it is the same for each level of activity. And no changes at all. 30,000, 30,000, 30,000, 30,000, 30,000. So now if you want to calculate the total cost, total variable cost plus total fixed cost, 32 plus 30, it is equal to 62. Okay, do the same thing for 9,000, 36, 30, 66. 40,000 plus 30,000, 70,000. 44 plus 30, 74, and 48 plus 30 is 78. All right. So normally in your final exam, all right, or in your test, we only test you for maybe 2 level of activities. All right, 2 level of activity. So you compare, later you can compare between actual. This is only budget figure. Remember, budget figure at 9,000 level of activity. All right, this is only the budgeting figure. So now, this is what we have done earlier. Okay, 30 plus 9,000 times 4 is 62,000. Let's say you want to identify at 8622 direct labor hours. Okay, so what happened? So you can identify and you will reach to 64,488. All right, the same process or the same way how to calculate it. All right, so you can obtain a new figures. All right, so look how we present it in the graph. This is the flexible budget data highlighting 10,000 and 12,000 activity. All right, so if you can see here, this is the level of fixed cost, 30,000 just now, a straight line, a green straight line. Okay, so this is the level of fixed cost and your total cost is uh, start at 30,000, all right? 0 level of production or 0 labor hours. You start at 30. All right, so I think you don't have any problem for this, okay? And you can look at this orange column is actually your variable cost and keep increasing when you increase the level of production, okay? Right, and then why we use flexible budget report is actually widely used in production and service department. All right. And it is actually considered as internal report that is used for assessing what we call the efficiency of the department operation. And the report will consist these two data, which is one is production data, include the selected level of activity like the previous one. All right, it also present the labor hours, all right, which is important in your production. And the cost data where it is involved with the fixed cost and the variable cost, where you can identify the expenses involved in the production. All right, and this is actually used to evaluate the managers' performance. Okay, so we look at figures here. All right, so maybe anyone can try to answer the question after this. Look at the budget. Maybe you have printed the what we call slide. See, this is the budget at 9,000 labor hours, and this is the actual cost that you involve in your 9,000 labor hours. If you look at the budget, material is 13,500 compared to the actual cost is 14,000, which is more than the budgeted figure, so 500 unfavorable. All right. 18,000 budgeted figure, but actual cost is 17. Therefore, you have 1,000 favorable. Okay. And utilities here is 4,005 and actual 4,006 is extra 100, which is unfavorable. So overall, 500, let's say you put it in negative way, okay, in bracket negative, positive, negative. So you now have positive 400 favorable, okay, and your fixed costs remain the same. So in total, you will have favorable of 400. The answer, okay, oh sorry, this is different. Okay, this is the way how do you calculate. So 400 favorable. Okay. Hopefully you are clear with this. Any question before we try to answer the question? Okay. Let us look at the question here. 9,000 direct labor hours. The indirect material is 27,000. So what you need to do, if 27,000 for 9,000 labor hours, so 27 divided into 9,000. So the what we call direct labor hours per hour is $3. Okay, 27 divide into 9,000, you have $3. Okay, if 28,000 of indirect material costs incurred for 9,002. Okay, what you need to do, 27,000 divide into 9,000, you have 3. You have $3. $3 times 9,200, right? Times 9,200, because you have to calculate the actual. Now you have to calculate 9,002 with the budgeted figure. So your budgeted figure is 27 divided into 9. You obtain $3. $3 times 9,002. You should derive to 27,600. Okay, that is your budgeted figure. All right. And the actual figure is 28. Sebab this is mentioned here. The indirect material cost incurred. Incurred means the actual figures. At 9,002 is 28. So if you use budgeted figure, you only have, you supposed to incur 27,600, but you incurred 28,000, which is more than the budgeted figure, extra 400. Is it favorable or unfavorable here?
Unfavorable.
Unfavorable. Thank you, Tessa. Okay, it is unfavorable. Okay, your projected is lesser where compared to your actual. Hopefully you clear about the calculation. I tried to write here, but nothing appear, all right, in your screen. Not sure why, because maybe I'm using the what we call presenter view, so I cannot touch the screen. Okay, I write something but nothing appear. So hopefully you are clear how I derive to 400 unfavorable. Okay, the answer is D. And if you want to present it, okay, this is another example. Okay, that is the first question. So now we have second question here. All right. The second question here is where special company flexible budget graph, the fixed cost line and the total budgeted cost line intersect the vertical axis at 36. So when it touch at the 36,000, it means here 36 means the fixed cost is 36,000 at the level of zero activity, zero direct labor hours, right? So it is 36,000. So you can know already that this is actually the fixed cost that we involve. And the total budgeted cost is 186. All right. At level of 50,000, you incur 186. All right. Can you identify the total cost now? The total variable cost, sorry. So 186 minus 36, right? So 186 minus 36 is 150,000. All right. So 150,000 you divide with level of activity. So you can calculate now. Is this $3 for your variable cost? Let us calculate here. Okay. This is the way how you calculate. You have intersect at 336,000 means that is actually your fixed cost. So the total cost is 186 at a level of 50,000. So compute, the question request from you, compute total budgeted cost at 30,000 direct labor hours. So let us calculate. At 50,000 direct labor hours, we incur 180. Intersect at 36 means this is the fixed cost, 36,000. So your variable cost is actually 150,000. And at 50,000 level, direct labor hours. So if you want to calculate per hour, so you divide into 50, you will get your variable cost per direct labor hours is $3. All right. Times 30,000 because you want to compute at 30,000 direct labor hours. So it is 90,000 and minus the total fixed cost 36,000 plus the total fixed cost. So the total budgeted cost for 30,000 direct labor hours is actually $126,000. All right. So maybe hopefully you can follow me and maybe you can try again later. All right. We have reached the end of the slide, or we have reached the what we call lecture today. All right, we have completed. So do you want to take a few minutes break before we try two example from the flexible budget? Is it okay, Miss Vita?
Yeah, it's
We
okay,
take a break.
Metro. Yeah.
So we come
5
back
minutes, 10 minutes.
10
How
minutes. We
many?
come back 11:15. Is it okay?
Okay, 11:15. Yeah,
Uh-huh.
11:15. You can take a break. Take
Or
some
the
break.
student want to try first the question? They want to try to answer question 1 first.
Okay. Okay, while
Then
waiting for Dr. Hannah, try to answer the question number 1. Okay, class? Okay, try to answer the questions
then
number
I
1.
give you 15 minutes.
Okay.
We come back at 11:30.
Okay,
Then I
ma'am.
show you the answer.
Okay.
All right.
Okay. So please do the questions number 1 first, yeah. While waiting for Dr. Hannah, yeah. Okay. Thank you, Dr. Hannah.
All right.
Tidak ada objek lah. Jadi kan asalnya lah aku loh. Allah, kan lo, tadi kabar cuci tak bisa, jawab kan cuci.
Can you see my
Yeah,
question?
yeah.
Oh, okay.
Okay. Class, can we continue our meeting? Yeah, because Dr. Anna is already here. So please turn on your camera again. Yeah, and listen to Dr. Hannah for discussing exercise number 1.
All right, class. Let us continue and try to look at the question here where I have to do some calculation here. All right. Okay. So it is about 4D company develop annual manufacturing overhead budget for master budget in 2016, where the expected annual operating capacity is 120,000 labor hours. All right. Okay. And the variable overhead cost, we try to get the per cost per unit. All right. So let's say we involve with indirect labor 600,000. So you have to divide into 120,000. So $5 is actually cost per unit. All right. And $1 is for the direct material. Okay. And you have 50 cents for your factory supplies. So maybe here you can know already about your variable overhead cost. So 5 plus 1 plus 0.5 means it's about $6.5. Okay, $6.50. All right, and your fixed overhead cost is 240 plus 120 plus 96. So it is 456,000. Okay, the relevant range for monthly activity is expected to be between 8,000 and 12,000 and direct labor hours. All right, and prepare flexible budget for a monthly activity level of 8,000 and 9,000. All right, you already know your total variable cost per unit. So maybe we can look at the solution. Okay, I prepare two level of activity here at 8,000 and 9,000. So we calculate the labor cost under the variable cost, the indirect labor, okay, 40,000 for 40,000 here. Okay, 40,000 you times with how much is now 5. 8,000 times 5. Okay, the working maybe you can this is 5,000 times 5, right? So you get 40,000. And for direct material here is not 5,000, sorry, 8,000. And here is 8,000 times 1. Okay. And here is 8,000 times 50 cents. Okay, so you derive to 52,000. If I want to know at the level of 9,000, again, you just do the same thing. 9 times 5 is 45. All right. 9 times 1 and 9 times 0.5. That's all. Okay, then you will get at 55,500. And then you include your fixed costs. Okay, the fixed cost just now is 240 if you want to get per month. So you divide into 12. Okay, 120 divide into 12 and 96 you divide into 12. Okay, so which is actually equal to 20,000, 10,000, and 8,000. So the total cost for the month, total fixed cost for the month is 38,000. Yeah. All right. So you can do 38,000. Okay. And at the same level, sorry, at the different level of activity, 9,000, you still incur the same. cost of fixed cost. Okay, 38,000. So 52,000 plus 38, it is equal to 90, and 58,500 plus 38 equal to 96,500. Very simple, right? So hopefully all of you get the same answer with me. Any question? Any doubt about this question one?
Okay, class, can you understand about the solutions for the question number one? Is it clear, right? It's not so difficult, right? Yeah, it's not so difficult. You only have to calculate the variable cost and the fixed cost. Actually it's the same, yeah, because the fixed cost, yeah, it's not no, yeah. You don't have to calculate the fixed cost, only have to calculate the variable cost for the different activities, right?
That is the only requirement for question
Yeah,
one. Which
yeah,
is too simple actually. This is the
yeah.
basic.
Too
Yeah.
simple, yeah. It's too simple.
So
Okay?
hopefully no problem with that. All right. So maybe for another example, maybe student can look at question 2. I think it's similar. I would like you to look at this question 4. How to
Okay.
do with this question 4. It is slightly uh, longer, and
Okay.
maybe we can try to do it a few minutes for you, and I will wait here if you want to check with me anything that you can ask during your workings. I'll
Okay.
be here. All
Okay.
right.
Okay, class. Please, you can try to answer the question number 4. Yeah. Please try to answer the questions number 4. Maybe it's more complicated than the number 1 and number 2. Yeah, I hope you can try to answer these questions. And while working, you also can ask some questions to Dr. Hannah. Yeah, not only about today's topic, but you can also ask about the previous topic. You can answer about the CVV analysis or the standard costing last week, or also about this topic, yeah, today's topic. Okay. Okay, let's wait for 5 minutes or 10 minutes, Dr. Hannah.
Yeah, okay, sure.
I hope students can do and try to answer these questions. Oke, silakan ya kalau ada pertanyaan ke Dr. Hana, ya. Kalau susah untuk bahasa Inggris, boleh bahasa Indonesia atau di chat room-nya boleh di chat, nanti saya yang akan translatekan ke Dr. Hana. Oke. Oke, berapa menit untuk pertanyaan yang nomor 4? 5 menit dulu ya, sebentar dulu ya, dicoba dulu. Dicoret-coret ya, di bukunya, di kertasnya. Okay, let's wait for 5 minutes and after that we can discuss about these questions, okay?
You have to prepare the lab at the level of activity of 6,000 machine hours. Question requests you to prepare flexible budget report, assuming that the company use 6,000 machine hours. Okay, so you have the information here. So try to, the relevant range is 4,000 to 8,000. All right, try to get in between, which is 6,000. All right. Get the budgeting figure at 6,000, and then you get the actual figures at 6,000. Then you compare, look whether it is favorable or unfavorable.
Okay. Is there anyone want to try to answer the questions number 4? So the first thing you have to do is analysis. Yeah, analysis you have to analyze first. Yeah, which one is the budget and which one is the yeah, because you should to compare between the budget and the actual. Right? Can you understand about that, class? Fiona, would you try to answer the question number 4? Can you explain to your friends?
Maybe I will try to answer question number 4, ma'am.
Okay, please.
Okay. For question number 4, the indirect labor is $5. As So we have 6,000 machine hours in August. The machine hours at budgeted is 6,000 hours. So indirect labor is $5. So $5 times to 6,000 hours. So we get 30,000. And for indirect materials, we have $2.5. So it times to $15. It times to $6, so we get $15. And maintenance, we got $0.5, so it times to 6 hours, so we get $3,000. And utilities $0.3, so it times to 6,000 hours, so we got $1,800. So total budgeted variable cost is $49,800. And for actual, we have 6,000 hours. So indirect labor is $5, so it times to 6 hours, so we get 28,000. And for indirect material,
Okay, wait. First, Fiona. For the actually is already stated on the questions. Yeah.
Yeah, ma'am.
Yeah. During August 2016, the company incurs the following manufacturing overhead. So you don't need to compute. Yeah, you just have to compute the budgeted. Yeah, the actual cost actually already stated on the questions. Okay, and then you only have to compute whether is it favorable or unfavorable. Yeah, for example, in direct labor, it's actually you have already computed it become $30,000. And on the questions, you can look at the third paragraph. Yeah, indirect labor are $28,000. Can you understand? Yeah. So there are variants $30,000 with $28,000. So the variance is $2,000,
Okay.
right? Yeah. Okay, like that. Okay, can you continue to the indirect labor and soon?
For indirect material, the
Yeah,
variance
for
is
indirect materials.
$1,200, so it's unfavorable.
Yeah, correct.
And for maintenance, budgeted is 3,000, and for actual is 2,800. So it is favorable, 200 favorable. And for utilities, the budget is 1,800, but the actual is $1,900. So it is unfavorable. We got 100 unfavorable. So the variance of variable is 900 favorable. Right, ma'am? And for
Yeah,
fixed
that's
cost,
right, for the variable cost. Okay, maybe others can try to the fixed cost. Okay, who wants to try? Anand, do you want to try? Okay, please.
Okay, I want to try the continue of explanations for fixed cost. So there are 4 items for fixed cost.
which are the supervision, insurance, property, taxes, and depreciation. So we can compute in the budgeting cost. For in the questions, it stated that the supervision is 1,200, and insurance 400, property taxes 600, and depreciation is 1,800. So we can directly state it in the budgeted, and then for the actual cost, it also stated that the supervision is 1,440, and then insurance 400, property taxes 600, and then depreciation 1,860. And then we can compare the variance between those two items, and it is the supervision is 240, and it is and the actual cost is higher than the budget cost, and it is the unfavorable. And then between the budget cost and the actual cost for insurance is the same, so it gets 0. And then for property taxes, for budget and actual cost also same. It is 600, and it's also 0. And then for depreciations, we cut the variance is 60, and then it is the unfavorable because the actual cost is higher than the budget cost. So I cut the total for the fixed cost is for budget is 400, and then actual cost is 4,300, and for the variance is the 300 million, and it's also unfavorable.
Okay, that's right, Anna. Yeah. We can conclude that the total variable variance is 900 favorable, but the fixed cost total variance is on 300, but it's unfavorable. So the total cost variance it becomes 600 favorable. Right? That's the solutions for question number 4. Okay. Because we still have much time, Dr. Hannah, is it okay to discuss one more questions maybe? I think the last questions is quite difficult maybe. Okay, please, Dr. Hannah. Okay, you still mute. Oh, ma'am, you still mute.
Okay, so
Okay.
can you see my solution?
Yes, ma'am.
All right. I just want to ask one of the student, the first one, I think Fiona, is it?
Ma'am?
Yeah,
Happened to be before Miss Vita corrected you, you derived to the same answer of 28,000, right?
Ma'am.
You derived to this figure, this one, right? Indirect labor. How you derive to this 28,000 actually for actual, and it is happen to be the same with the actual answer. I heard just now you time something with something, right?
I was wrong, ma'am.
Yeah,
It
I want to
actually
know. Why suddenly you take 6,000 and times with one of the figure? Which figure actually?
I times it with indirect labor, ma'am, per hours, I think, like
Indirect
$5.
labor per hours. You mean 5 ringgit?
Yeah, $5 times to 20x per.
Yeah, the same actually as you say, the same calculations, ma'am. So it
Like the
becomes
budget.
also 30,
But
yeah, you
she
said
mentioned
before, yeah.
28,000, right? Fiona, if I'm not mistaken, if I'm not wrong, you mentioned 28,000.
Yeah, I was wrong, ma'am.
Oh, you calculate 6,000 times 3.
Yeah, like what I did to the budget, ma'am.
690. Oh, you're supposed to have 30,000 here.
Yeah.
Is it?
Yes, ma'am.
Oh, okay. Because maybe I confused just now because I heard you mentioned 28. So maybe you have times with any something figure. But the right one is mentioned by your lecturer, stated mentioned by your lecturer, and hopefully you can look at this solution and maybe you will try to look back again. All right, so now we try to proceed with question 5 since we have a lot of time. So you may take your time, and once you're ready, you just inform us, and I will be here so and waiting for you all. This is slightly longer where you have to prepare this static and flexible, but
Yeah,
it's
it's a
easy.
little
Okay.
bit, it's a little bit more complicated than before the last questions, right?
Yeah.
Yeah.
Okay.
Okay, class, you can try to do it first, yeah. And then after that, we will discuss about the solutions for the question. Okay, how many minutes? 5 minutes? Done. Okay. Actually, I want to hear Teti's voice, Arif, right? Shira, Rahman, not only Fiona. Yeah, the chat room. Okay, Nasla. Okay, wait. Nasla is asking questions. Okay, Dr. Hannah. There is
Yeah,
a
we'll look at
questions
the chat,
from
huh?
yeah on the chat room. Okay, actually, it's simple questions, man. Yeah, Nasla asks whether if the budget and the actual are the same, so there is no difference. So why should it be informed?
Okay,
Favorable
0.
or non-favorable?
No.
Yeah, 0.
All right. Just in case if there is no difference, let's say you obtain the same figure in your actual and your budgeted. That's why if we look at the fixed cost as an example, but it can be happen in your variable cost as well. All right, where there's no difference between factual or between budgeted and actual, then you derive to the figure of 0, which is no favorable or no unfavorable. All right, just leave it blank there. You can put dash and so on. It depends on whatever that your Miss Vita actually wants you to do. But to me, normally I will ask my student just to put dash because there's nothing there. Okay, or you can put 0. Right, means it's not favorable or unfavorable. But just to remind you, in the real situation, it's actually very difficult to obtain that because we cannot make it's very seldom. Okay, at least we will find something different between budgeted and actual, all right, in our real case example. But for the purpose of our study, normally the question will not come out like that. We will do something and we want you to calculate. If you found that no different for everything, you have to look back at your answer. It's very seldom we ask that way because we want to learn something. All right, but it is not wrong if you achieve to that, no difference between actual and budgeting figure. All right. Hopefully I answered you.
Okay, Nasla, can you understand the explanations from Dr. Hannah? So in the real conditions, yeah, if you are working, actually it's impossible to find zero, right, ma'am? Yeah. It's look like the ideal conditions, yeah. So some to find that situations, yeah. And if it becomes zero, yeah, right, Dr. Hannah said you have to check, yeah, why it can be zero, yeah, because the normal situations you have to find, we should find the variance, yeah. So the question is more complete when you got the zero variance, yeah, in the real situations. But in these questions, it's only an exercise that we can get favorable, we can get unfavorable, but also we can get zero. Okay, Nazla, can you catch the questions, the answer?
Yeah, actually it is a good question.
Yeah.
Right? It is a good question where it is going to make you alert when you achieve that.
Yeah,
Very
that's right,
seldom.
ma'am.
At least we want to test you something, so we will let you have some figures. All right. That is the trick during your test. Once you achieve zero zero, everything zero, then there's something wrong with the solution. All right. So normally I'm not sure there, but I will prepare the question, and I will want my student to identify or to learn about the favorable and the unfavorable. Right? Okay. Thank you to Nizla. Right. Maybe you can try to proceed with another question just now. Or if you have anything, maybe you can chat again.
Okay, for the question number 5, I think you should write down on your paper because they ask you to make a report, right? Okay, class. So the question number 4 is a little bit difficult than the previous questions. Anyone wants to try to explain about the solutions? Maybe not all. Maybe the first part first, the static budget report. Okay. Who wants to try? So answer the questions. Okay, Corinne, where are you, Corinne? Okay, who wants to try? Anna is already, Fiona is already, Fadila already in the last meeting. Rahma, do you want to try? Or Nabil? Nabil, do you want to try to answer the questions for question number 5?
Wait, man.
Okay, Nabil. Okay, not full, yeah. Maybe we can start with part 1. Okay, Nabil, can you?
Sorry, ma'am. I doing the MKU quizzes, ma'am.
Okay. Okay, how about the others? Okay, wants to try Corinne? Corinne, do you want to try Corinne? Hmm? Oh, you can try first. Okay. Okay, where is Teti, Tessa, and the others?
All right, class. Maybe we can look at the first solution. What you need to do. I try to give you the format. All right, let me draw for you. Let's say now we focus on question 5A. All right, prepare the static budget. Static budget report. Okay. All right. So you can start with your fixed cost, or maybe you want to start with variable cost, no problem. All right. Let's see. This is your variable. It's a bit difficult for me to write. Okay. My handwriting is not good here, but hopefully you can still understand about this, a variable cost. Okay. And then you put your actual figures, actual, and your budgeted, okay, and difference. All right. Can you see? Is it appear on the screen?
Yes, ma'am.
Okay. So you do this first. So now maybe we want to write about direct material. I use DM. Direct labor, supplies, indirect labor, and power. Okay. Identify the actual figures. Okay, so let's say this is variable cost, right? And I delete this to have more space for me to write actual, right? And let us do it together. Is it okay, Miss Vita?
Yeah, of course.
Okay, so I don't have okay, never mind. I will pick any of the student. Maybe we do one by one. All right. So now look at the question. We want to do the static budget report. So as I mentioned earlier, static means you when come to actual, you don't have to do anything. Just take the actual figures from the question. All right. So now, which one is the actual variable cost? Can someone help me? Anna? Anna want to answer?
Actual cost direct material 178,000, ma'am.
100, right? Okay, 178. Okay, direct labor, Fiona? How much
Direct
is the
labor
direct
is
labor? Huh?
wait, ma'am. Direct labor is 245,000, ma'am.
Yeah, correct. Okay. Then the supplies is 2005, right? Indirect labor, 8,000. The power, 1,002. The rest of the class, are you following? Look for the actual variable cost. Okay. Only actual variable cost here is 178, 255, 25, 8,000, and 1,002. And we have to find the budgeted figure now. Okay. Do you have the budgeted figure in total in the question? Do you have? Look at the above information, budgeted fixed cost in total, but budgeted variable cost not in total. It is per unit, right? It is per unit. Therefore, what you need to do here, you have to do some calculation. Okay, can anyone help me with this direct material? What need to be done? Teti, can you help me, Teti?
128,000, ma'am.
How you derive to 128, Teti?
8,000 times 60.
Right. Okay, 8,000 times 16. It is 128. Okay. And how about the direct labor? Fendi, do you want to try?
One
Fendi?
1,000
Okay. 1,000?
76, one 176,000, ma'am.
All right. Okay. It is 8,000 times
1,000 times 22.
22. 176. Okay. And the supplies. How about the supplies?
8,000 times 0.20.
20 cents. So it is 1,006.
600.
Okay. How about indirect labor?
8,000 times 0.80.
80. Okay. So 88 is 6,400.
400.
600. How about power?
8,000 times 0.10.
1. Okay.
0.10.
0.10. Okay. Times 8,000. It is actually 800.
800.
Okay. Do you want to solve this? Compare between actual and budgeted. How much is the difference? 178 minus 128, it is
50,000.
50,000. Is it favorable?
Unfavorable, ma'am.
Unfavorable. All right. So I put here because I got no space. All right. Okay. And the next, direct labor. We actually projected 176, but suddenly the actual is 245. It is also unfavorable of how much?
69,000.
69,000. All right. And for supplies, 16225 is about 900, right?
Yeah.
It is
900.
also unfavorable. We can see that all of the answer is unfavorable. 8,000 compared to 6,400 projected is the difference is 1,006. 8 between 1, 2 and 8 is unfavorable 400. I should use red color just now. All right. So all is unfavorable. Okay. How about fixed costs? How about fixed costs here? You have supervision, you have depreciation, you have rent. How much is the actual fixed cost here?
Supervision,
Hmm?
supervision 60,500, ma'am.
16,500. Depreciation,
18,000, ma'am.
18,000. And the rent is 8,000. How about the budgeted figure? Where do you get the budgeted figure? It's on top of the actual data. It is the budgeted fixed overhead, which is 15,000, right? 18,000 and 8,000. All right. So from here, we can see that no figures for these two, for depreciation and rent, no different. However, we have 1,005 for supervision. Supervision, if you look at this, actual is 16,500. The budgeted is 15,000. Then again, this is unfavorable. So, the total unfavorable figures here, you have to total up everything here, right? You you will derive to 1, 2, 3, 400 unfavorable. Okay. Do you have any doubt about this answer? Hopefully you can solve the problem. All right. For the similar question. All right. And now maybe we can continue with section B. Let me let us go to flexible budget. Okay, the format is again the same. All right, let us answer this first since this is more easier. We go through the fixed cost. You have this actual. A stands for actual. I write actual and budgeted. Okay. And your difference. Favorable or unfavorable. Budgeted. Okay. Now, budgeted at what figures? If you look at the question, you have the unit sales of 8,000 and unit production is 8,000. Okay. And the actual data is actual unit sales 9,000, actual unit production of 10,000. So, now you have to refer to which? To 9,000 or to 10,000 for the budgeted figure. The data actually is available for which level of you want to refer to sales or to production. This is actually a trick in this question. Some student might make mistake. Maybe they will take 9,000 or maybe they will take 10,000. So anybody want to try? Which one need to be considered? Because the above, the static budget report, it's based on unit production of 8,000. You don't have any problem because sales and production is the same. But now, when come to flexible budget, you have 9,000 sale, but you have 10,000 production. You have two figures. Which one to choose? Anybody? You should prepare the budgeted based on what?
Production, ma'am.
Huh? Production, yes. This is only the trick. When we give you sales figure, you have to remember we have to identify the cost is based on our production. So the budgeted should go for 10,000. Right? 10,000, right? Okay, so now we try to write the fixed cost first. Look at the fixed cost. What is the actual fixed cost? Fadila, want to try? Supervision, depreciation, and rent.
For the fixed cost, 16,500, ma'am.
Okay, 16,500 for supervision. How about for depreciation?
Depreciation is 18,000, ma'am.
Okay. How about this rent?
And rent 8,000.
8,000. And how about the budgeted?
In the budget, five for supervision is 15,000, ma'am.
Okay. Depreciation.
Depreciation is 18,000,
Okay.
and rent is 8,000.
All right. Why it is the same with the static budget? Do you have any idea, Fadila? Why our answer is the same when come to the fixed cost?
Because this is a flexible budget, ma'am.
Yeah. Why flexible budget answer and static budget answer is the same when come to the fixed cost?
Maybe because the budgeted fixed overhead is the same, ma'am.
Yeah. Budgeted, fixed cost, or even the actual one, at any level of production when given to you, you can use that figure because fixed costs remain the same at any level of activities. All right. So now, actually, you already know this is 1005 of unfavorable, no, 0, and this one is 0, right? Okay. And maybe we can proceed with these variables. Now flexible. Therefore, when you mention this is at level of 10,000, then the variable cost also will based on the 10,000 unit. So now the first thing is direct material, direct labor, supplies, indirect labor, power, and okay, we have 2, 4, 5. Okay, direct material. How about the actual? Fendi, I can see you from here, Fendi. Do you want to try?
Arif, yeah.
Okay, ma'am.
Nah.
For direct material is in actual is 178,000.
78. Okay, how about direct labor?
Direct labor is 245,000.
Right, and then
For the supplies is 2,500.
okay, indirect labor.
The labor is 8,000.
Correct. How about power?
Is 1,200.
Okay. All right. The actual you take from the question, right? You have to do some working here, right? When come to your budgeted. Okay, when come to budgeted, you have to do some calculation. Do you want to help me with this?
Okay, ma'am.
Okay.
For direct material is $16 times to 10,000.
Correct. Times 10,000 because now you will have to identify at a level of 10,000. So you simply take that 10,000, you times with the budgeted variable cost. Okay, so 16 times 10 is 160,000. How about direct labor?
Direct labor is $22 times to 10,000.
All right, so you reach at
220,000.
right 220,000. How about the supplies?
Supplies is 20 cents times to 10,000.
Okay, which is
2,000.
2,000. Next, your indirect labor. Okay,
80 cent times to 10,000.
okay, so it is
8,000.
8,000. How about power?
Power is 10 cent times to 10,000, which is 1,000.
Which is 1,000. Okay, so now the difference for direct material is 18,000, right? Is it 18,000? 18,000, right? Whether it is favorable or unfavorable?
Unfavorable, ma'am.
Unfavorable, because the actual is higher than the budgeted. And the next one, direct material, is the
25.
difference 25
Unfavorable.
unfavorable. The supplies
Is 500.
500
Unfavorable.
unfavorable. And indirect labor is 0. And the power is
200.
200, also unfavorable. So actually, you should derive 200 unfavorable. Okay, please do your total here, the total cost. Okay, you should derive to 200 unfavorable. All right, thank you, Arif. Okay, and I think the section C list 3 basic type of responsibility. I think it's not tested, if I'm not mistaken. So, if I'm not mistaken, yeah. All right. So, maybe we can skip that. So, hopefully, you have better understanding now on how to prepare the static and the flexible budget. And actually, it is a simple part of the chapters. Okay, compared to the other few chapters, I think uh, flexible budget is quite easy, and hopefully you can get um, good marks in this section. All right. Normally the student score when come to the standard costing, CBP also quite helpful, and the flexible budget. They love if this question will come out. Okay, come out in the final or even in your test. All right. So I think we come to the end of the session. All right. Then do you have any question?
Okay, any questions before we end the class? Any questions?
Ma'am, I have a question, ma'am.
Okay, please, Hannah.
I think it's like a very simple question because I see in the question 5, there are in the budgeted variable cost, there are the items, it is the power, ma'am. So can I get the explanation for the type or the example of this power, ma'am?
You mean power under the variable cost?
Yes, ma'am.
Why it is under variable, it is not fixed, or?
Yeah, and then what the example for this power, ma'am?
Oh, power is the power supply, the electricity.
Okay, because yeah, we don't use the power cost like that, ma'am, in Indonesia. So when it becomes electricity, we say it electricity cost directly.
Nah.
Okay, yeah.
Power sometimes is more, you know why? Because when we get involved with manufacturing company, a big company, they were involved in a high usage of electricity, and normally we call it power. Right? So that is power supplies. Okay, and supply. What is supply? Then we can see then there is supply here. What's the difference between power supply and supply? Supplies here maybe for the office usage also. All right. A good question. All right. Okay. Who supply this electricity to the Indonesian? Like Malaysia, we have Tenaga Nasional Berhad. How about in Indonesia?
In Indonesia, we have PLN, we call it PLN.
That
Yeah,
is the
PLN.
government,
Yeah,
right?
it's the government company. Yeah.
The rate is what we call controlled by the government, right?
Yes, that's right. Monopoly by the government. Right?
Yeah. A few of our daily needs is controlled by the government, or otherwise we cannot have electricity in our house if the government did not control it. Okay, any other question?
Okay, other questions? Another questions for Dr. Hannah? Okay. Maybe before we end the class, maybe it's not a question, ma'am. Maybe testimony or something for Dr. Hannah before we close the last meeting. Any testimony or what things that we want to say to Dr. Hannah? Okay, or you can find some difference between your teacher with Dr. Hannah, or what can you get during these three meetings? Anyone want to say something? Yeah. Fadil, do you want to say something? Where are you, Fadil? Okay, no. Anna, do you want to say something, Anna?
Okay, I think I want to say something to Dr. Hannah. First of all, I'm really grateful and thankful for Dr. Hannah because you kindly explanation about the material of financial management accounting for us, and it's really clear. But because we are still like lack of other understanding, so there are sometimes we cannot understand well, and you can really well to explain to us, ma'am, and it's really good explanations. And lastly, I just want to say thank you, ma'am.
Thank you.
Okay.
Very commendable comment. All right.
Because Dr. Hannah patiently explain
Yeah, I want the
number
student
one.
to have a clear understanding. All right.
Yes.
And it is actually very difficult for you to what we call ask everything in the class, right? Because you are so far away. When come to my student, they will come and catch me in the room. All right. They don't want to ask in front of the others.
Yes,
They
some
don't
of
want
the
to let
students
their
say that,
friend
right? Yeah.
have a skeptical thinking, simple example. So want to ask the lecturer again, and that is happened to my student, and then they come quietly to my room and start to discuss about the same thing again. And another person come to my room asking the same thing. All right, and then I start change my mood. Why don't you ask me during the class? Why now you come? And then actually when you ask in front of your colleague, all right, you will get more better. In fact, don't worry, they are not better than you. Okay, they are the same. My style, lifestyle, when during my study time, I always refer to my lecturer. I don't refer to my colleague. I trust my lecturer. All right. My colleague is more or less the same with me. All right. I know. I don't have any full-fledged student last time. My colleague all mostly almost the same with me. So I believe one or two years they are always have good results. Okay, but I will still trust my lecturer and get the information from the lecturer. I'm worried that my friend will give me a wrong answer. Okay, so that's why it's nothing to worry, and don't feel shy to ask in the class. They don't want to ask a question, let them. Okay, the way how I am the one that always ask the question. Okay, it is up to you. You want to think bad of me, it's okay, no problem. After all, after study they don't see me again. Okay, so I don't have worry. All right, and at the end I have to show that I will get a good results. All right, I will get the good results. I don't be the last in the class, but sometimes I don't be uh, one of the top also. I have a good colleague also. All right, so it is actually nothing's wrong if you want to ask question. All right. I think international students should be good in all the papers. All right. So I think before we end, I like to say something. Okay, I enjoy teaching you all, so that's why I continue to serve you this semester. All right, and I think UNP student and my student here, most of you, it is also the same with my student here. All right, so just where we only meet online. All right, so try your best to do your uh, in your studies. All right, so maybe you want to become accountant, auditors. Two of my daughter is now already accountant. All right, and the third one is going for his practical today, starting today, also doing accounting, and he is now in the audit firm, started today doing the practical, and I think quite enjoyable when all my family members is actually doing the same thing. But the what we say, that is the pro about the accounting, but we miss other knowledge, right? I don't have any engineering knowledge, all right? So that is the one thing. If the whole person or the whole in your family come from the same background, okay, but you have to take a challenge to learn other thing as well. All right, so don't worry so much, study hard, and thank you for listening. Hope you gain at least something from me, or even a single word from me. Okay, I don't mind because I know uh, I'm a student also before. All right, so not everything can be catch up during class, but you need to settle it before you enter into new topic. That is my concept. All right. I don't want to carry a lot of things. I'm not that good. Okay. So settle everything before another topic. All right. So I think thank you for everything, and thank you for giving me a chance to have a class with you all. All right. Thank you, Miss Vita. All right. Thank you
Yes.
for to UNP also. All right.
Yeah, thank you so much, man. I would like to say thank you so much for your time, for your patience to face my students. Yeah, even sometimes they didn't respond, just keep silence. But yeah, like usual. Yeah, but at least I think in the last two meetings they already try to answer your questions. Yeah, sometimes they are only keeps just I don't know what's the problem. Yeah, it's not only on online class, man, but also in offline class. Yeah, just keep silent, so the teachers always ask them, can you understand about my explanation or not? Please give me some response. Yeah, something like that. But I know they are good students. Yeah, my international students. Yeah, thank you so much, Ruda Hannah, for your time, and I hope we can also meet you not only online, but maybe next semester we can see you offline. Yeah, since you say
Inshallah.
that you're gonna come to Padang. Yeah, don't forget
Insyaallah.
to chat me, ma'am. Don't forget to chat me. Maybe we
Insyaallah.
have,
According to my
yeah.
colleague, they are going somewhere around August or September, something like that.
Yeah. Don't forget. Yeah, I will tell to my department head. Yeah, I hope they can follow also your schedule. So you not only in Padang, okay. Polytechnic Negeri Padang, right?
Yeah,
Polytechnic
yeah.
Negeri Padang, but also maybe you can also come to UNP actually.
All right. We are going to have about 3 weeks online
Oh, 3
classes.
weeks, yeah.
3 weeks online classes for our coming semester. All right. We are going to start our semesters on the 18th of March until Hari Raya, before Hari Raya.
Oh,
And during Hari
okay.
Raya, we will have break. So just in case, I am teaching two codes online. One is risk management, and another one is what we call this integrated case study. All right. Just in case any one of the student, whether the current student in my costing class here or any student, maybe they want to join, since it is online, so you can join us. All right, join us, and I can provide you the timetable, so you can join our meeting just to get more knowledge or so on, or
Yeah,
to get to
that's
know
good.
my
Yeah.
student or so on. All right.
Okay. You can chat on me, and then I will share to my students.
Yeah.
Okay. Okay. Thank you so much, Dr. Hannah, for
Thank
this
you.
semester. We already have 3 meetings for the managerial accounting. So, like what you said before, hopefully we can finish it before Ramadan, and Alhamdulillah we can finish it before
Alhamdulillah.
Ramadan. And thank you so much, my students. Thank you so much, Dr. Hannah. Maybe for the last time, we can take some picture together.
Okay.
Okay, for the documentations. Okay, 1, 2, 3. Okay, wait, 1, 2, 3. Wait. Okay. Okay, thank you so much, Dr. Hannah, for your
Okay.
time. Maybe we can see you again next semester, whether it's online or offline class.
Happy Ramadan.
Yeah,
Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you so much, Dr. Hana. Oke, thank you. Oke, cukup pertemuan hari ini. Terima kasih ya, udah selesai tim teaching untuk yang managerial accounting ya. So next